The Indian IPO market has been buzzing with heavy activity in recent years, with the steady stream of companies making their debut on the stock exchanges. This trend has been fueled by a combination of factors, including a growing economy, favorable government policies, and a rising investor appetite for new investment opportunities. Amid this backdrop, Bajaj Housing Finance Limited, a prominent player in the Indian housing finance sector, is gearing up to join the ranks of publicly listed companies. With its IPO on the horizon, the company is poised to tap into the vast pool of capital available in the market and further strengthen its position as the leading provider of housing finance solutions. In this video, we will discuss the business overview of Bajaj Housing Finance Limited. We'll cover the IPO details, the objectives of the fundraising, the market opportunity, financial performance, and valuation. Finally, we'll conclude with the strengths and weakness analysis. Let's get started. You're watching Informed Investor, an initiative by Equentis. India's second largest housing finance company will debut on the stock exchanges through an initial public offering of shares, and investors are already excited and expecting high returns from it. To put it into context, this company is part of the illustrious Bajaj Group. The image on the screen shows the prominent Bajaj Group companies which have a diverse portfolio of businesses spanning various sectors. And out of these are about 10 companies that are listed on the stock market that contribute significantly to its overall financial performance. Big market players like Bajaj Finance, Bajaj Finserv, Bajaj Auto, Bajaj Electrical are a few to name. Okay, now moving on to the main agenda of the video. Bajaj Housing Finance Limited is a 100% wholly owned subsidiary of Bajaj Finance. Founded back in 2008, Bajaj Housing Finance, as the name suggests, is a non-deposit taking housing finance company registered with the National Housing Bank since 2015, offering tailored financial solutions for purchasing and renovating residential and commercial properties. Their product range is comprehensive and includes home loans. As the name suggests, is offering home loans to salaried, professional or self-employed individuals. This includes loans for financing for new home purchases, resales and balance transfers, and additional top-ups to existing customers. Second is loans against property, or LAP. It is basically a type of secured loan where borrowers can pledge their residential or commercial property to get a loan. It's one of the most common ways individuals and businesses raise capital using an owned property as a collateral. Next is lease renting discounting, which is a type of loan given to HNIs and developers to finance the commercial real estate. It is basically a loan secured by the future rental receipts from a commercial real estate property. Lastly, it's developer financing, which is offering financing options to developers for both residential and commercial real estate development projects. Basically, their financial products cater to every segment from individual home buyers to large-scale developers. The image on the screen shows the breakup of their product range. As of June 2024, home loans contributed the most, about 57.5% of the entire product segment. Second came in lease rental discounting at 19.5%, followed by developer financing at 11.2%. Moving on to the IPO details. The IPO opens for subscription on September 9th until the 11th. It has fixed the upper price band at 70 rupees per share. So for a retail investor, the minimum lot size would be 214 shares, translating to a minimum investment of rupees 14,980 rupees. Bajaj Housing Finance plans to raise 6,560 crores from the public, out of which 46% of the issue would be an offer for sale, which means the existing promoters and shareholders are selling off shares, while the rest of the issue will be a fresh issue of 3,560 crores, which the company will utilize for its business. The IPO has reserved 35% for retail investors. So now, what are the objectives of the issue? Being a housing finance company, the company plans to raise funds to augment and enhance the capital base to meet future business requirements of the company towards onward lending. In addition, the company expects to receive the benefits of listing the equity shares on the stock exchanges, including enhancement of the company's brand name and creation of a public market for the equity shares in India. Now, what about the market opportunity and the future trend of the industry it operates in? Before we jump in, let's understand the industry. The Indian financial system includes banks and non-banking financial companies, or NBFCs. Though the banking system dominates the financial services, NBFCs have grown in importance by carving a niche for themselves by catering to customers in underbanked regions or for those who would not be catered by traditional financial institutions due to the absence of credit history or lack of proper collateral records. But recently, in 2021, the RBI had proposed a tighter regulatory framework for NBFCs by creating a four-tier structure with progressive increase in regulation intensity. The image on the screen shows the four layers, with the base layer consisting of NBFCs having asset size of less than 10 billion rupees. The middle layer will consist of all non-deposit taking NBFCs having an asset size of more than 10 billion rupees and all deposit taking NBFCs irrespective of their asset class. The upper layer will consist of selected set of NBFCs specifically identified by the RBI and includes the top 10 NBFCs and about 25 to 30 companies based on parameters. In fact, Bajaj Housing Finance is a part of the upper layer of NBFCs and has bank-like regulations. Now moving on to housing finance market in India. India has a very low penetration in terms of housing finance as compared to other economies, which shows a high potential for expansion of Indian housing finance companies. The Indian housing finance market clocked a healthy CAGR of approximately 13.1% during fiscals 2019 to 2023 on account of rise in disposable incomes, healthy demand, and a greater number of players entering the segment. Going forward, CRISIL expects an overall housing segment to grow at a CAGR of 13 to 15% from fiscal 2024 to fiscal 2027. Moving on to some number crunching and financial performance of the company. Bajaj Housing Finance has demonstrated strong financial performance leading up to its IPO. If you see the image on the screen, the company has consistently shown impressive growth in its AUM, indicating a grower customer base and an increasing loan disbursements, both of which have grown at a CAGR of more than 30%. Talking about the total income, it recorded 2,208 crores in the first quarter of fiscal year 25, a growth of 25% from the same period last year. On a 3-year CAGR basis, it has grown at an around 42%. Net interest income, which is the difference between the interest income and finance costs for the year, has grown at a CAGR of 37.5%. Lastly, the net profit has grown at a CAGR of an impressive 56% over the last 3 years. While the financial performance of Bajaj Housing Finance looks good, let's see how and where it stands among its peers. Looking at the assets under management for fiscal year 24, Bajaj Housing Finance is the second largest housing finance company with an AUM of 913.7 billion rupees after LIC Housing Finance AUM of 2,868.4 billion rupees. Additionally, it is the second most profitable housing finance company in India with 17.3 billion rupees in profit after tax, followed by strong return on average assets of 2.4% and return on average equity of 15.2% for the fiscal year 2024. Furthermore, Bajaj Housing Finance has the lowest gross NPA ratio of 0.27% and net NPA ratio of 0.10% among large HFCs in India. It also has the highest provision coverage ratio of 63% among peers. Lastly, Bajaj Housing Finance also has the highest possible credit rating in India for both the long term as well as short term. Now, what about the valuation? Looking at the valuation of Bajaj Housing Finance, with an upper price band of 70 rupees per share and an EPS of 2.6 per share for fiscal year 24, it is valued at a price to earning ratio of 26.9 times and a price to book value of 3.8 times, which is higher than some peers like LIC Housing Finance, PNB Housing Finance and Canfin Homes. However, this higher valuation could be justified by Bajaj Housing Finance's strong and diverse asset management growth, low NPAs and advanced technology platform. Now let's talk some facts about Bajaj Housing Finance. Bajaj Housing Finance is the second largest housing finance company in India with an AUM of over 97,000 crore rupees. It is the second most profit-making housing finance company in India with a strong return on average assets and return on average equity for fiscal year 2024. It is the most diversified housing finance company in India, offering a full suite of mortgage lending products. It has the highest salaried customer mix in the home loan portfolio among large HFCs. It is focused on prime housing with the higher average ticket size among all HFCs. It has the lowest GNPA ratio of 0.27% and NNPA ratio of 0.10% among large HFCs in India. It also has the highest possible credit rating in India for both the long term as well as short term. It has the second highest loan disbursements by HFCs in India, amounting to 446.6 billion for fiscal 2024 and 120 billion for 3 months ended June 30, 2024. Lastly, it is the second highest AUM per branch and AUM per employee amongst large HFCs in India. Coming to a last segment, which is the strength and weaknesses. Talking about strengths first. The Bajaj Group's established reputation and trust among Indian consumers are significant advantages for Bajaj Housing Finance. This brand recognition can attract a wider customer base and enhance market credibility. Bajaj Housing Finance is a major player in the Indian housing finance sector. They're the second largest housing finance company in India based on assets under management, and they've been expanding rapidly with their AUM growing at a CAGR of more than 30% in the last 3 years. The company has demonstrated strong financial performance, including consistent growth in assets under management, low non-performing assets, and healthy profitability. Employing a centralized underwriting process and leveraging digital tools for credit assessments, it has enabled them to effectively manage and handle risks across their product lines. Bajaj Housing Finance is known for its careful approach to lending. About 87.5% of its customers are salaried, indicating they stick to a cautious lending strategy. Talking about weaknesses. The Indian housing finance sector is highly competitive with established players and new entrants vying for a market share. Bajaj Housing Finance faces intense competition from public sector banks, private sector banks, and other housing finance companies. The company's loan portfolio consists primarily of home loans and loans against property. As the underlying security of the loan is primarily the mortgage, a substantial portion of the loan portfolio is exposed to events affecting the prices of the real estate sector. So any significant downturn or adverse developments in the real estate sector may lead to an increase in impairment losses and adversely affect the business results of operations, cash flows, and financial condition. The housing finance industry is sensitive to interest rate fluctuations. Since many of their loans have floating interest rates and some borrowings are fixed rate, fluctuations in interest rates could impact the profitability. In particular, it would affect their net interest income, net interest margins, and the value of their fixed income portfolio. The housing finance sector is subject to various regulations and compliance requirements stipulated by the RBI. For instance, housing finance companies have to comply with capital to risk weighted assets ratio, followed by liquidity coverage ratio and principal business criteria. Any changes in regulatory policies or stricter enforcement can pose challenges for Bajaj Housing Finance. Now that you have a comprehensive understanding of Bajaj Housing Finance Limited, you are equipped to make an informed investment decisions. But a few other factors to consider once the IPO opens for subscription is the subscription data and the kind of response the IPO gets during the bidding phase. Second can be the GMP or the grey market premium, which gives us an idea about the listing gains. However, it's not always accurate. Having said that, consider your risk tolerance, investment horizon, and the company's alignment with your financial goals before making any commitments. With that, this is me, Ralston, signing off. Have a great day and stay safe.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.